Welcome to the daily stock review of Willis Lease Finance Corp. Goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. If that sounds good, subscribe to come along. Who am I? I'm Jack. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years, sharing what I've learned along the way. This is my investing process. It's got 5 parts. Today I'll cover how I came across this stock and the 5-minute check that I'll be doing to see if it's worth looking into further. These are the guys I learn off. They did pretty well for themselves over just a little while. By following the breadcrumbs they've left behind, should be able to follow in their footsteps. If you'd like the free resources I wish I had when I first started, investing checklists, stock valuation calculators, things like that, link in the description. It's my gift to you guys and it's free. Let's get started. Willis Lease Finance Corp. A mouthful of a name. I mean, it's not really too easy to say, so that's a negative already. Just jokes, but you can see that the stocks had a little bit more interest in it over the last couple of years, and it's been around a while. 1996, and you can see obviously most of the actions happening in these last couple of years. Now it's had its ups and downs and whatnot, so it'll be interesting to go through the financials and see if it varies by this much, or if this is the result of people getting really rosy expectations, a lot of hype, and then coming back down to a bit more reality where the actual value of the stock is. One thing to take note of, PE is at 15 at the moment, which is usually on the low end, and it's especially on the low end if this business has got some significant growth expectations. So let's have a sticky beak at the financials. While I'm getting the 10K form, the annual report open, and finding the financials, I'll let you know. I came across this stock. I'm looking for some small caps, anything less than 2 billion, and that in the industrials segment, just for the time being, I'll have a look through those ones first. And businesses that had high revenue growth as well. Alright, dang. Alright, so in this latest report, it's only got 2 years worth of information, so I'm going to go back another 2 years to the 2023 report, just so I can compare those kind of numbers. Okay. All right, so in 2022, we had, let's go the most recent year. They do have a lot of different revenue streams, so it'll be interesting to have a look at each one. Now, I have no idea what this business does, except for the fact that it had some photos of airplanes in it. But this just shows that you can analyze a business very quickly just by looking at the financials. And then once you know that, you can then have a look and read through the financial report, understand the rest of the business, etc., if the financials are interesting enough to have a look at. So let's have a sticky beak and I'll show you what that kind of looks like. So we've got lease, rent revenue. What are we talking? Thousands, so 291 million. Maintenance reserve revenue, so 231. Spare parts and equipment sales, interest revenue, gain on sale of leased equipment, gain on sale of financial assets, maintenance services revenue, and other revenue. All right. So what are the trends here? We can see that this is increasing, this is increasing, this is increasing, this is increasing, this is increasing. A little bit of an increase, other revenues increase. Let's go back a couple of years. 162, it's increasing. Spare parts and equipment sales decreased a little bit. Oh, from 27 million to 20 million for that year. But all in all, everything else is increasing. 32 versus that. So other revenues decreased a bit across the years. But when we look at the pardon me. When we look at the total, we've got from 2022, 300 million in total revenue. Steady increase up to 730. So what have we got? 300, 730. We've got a double in 4 and 2.5 times, roughly, over a 4-year period in revenues. And it's not from one revenue stream either. It's across the board. So that is a pretty good sign, and that's obviously the checks that I'm doing and the screen for finding this stock was looking at this revenue growth figure here. All right. It's got a breakdown of like cost of maintenance services, which to break down the actual margins of the business is going to be for each revenue stream might be a little bit tricky. So we'll just go straight for net income. And we've got our net income figure from the previous years as well. We've gone from 5 million to 43 to 108 to 113. So some pretty strong growth. And if we just nitpick a couple of those numbers, we've gone from 5 million up to 113 million in net income. Now, depending on what these starting points are, like that might have been a pretty shit year. What's that? It's over a 20x in net income. So let's have a sticky beak at the balance sheet of the most recent year. Just want to make sure there's nothing crazy going on that I don't like. So we've got what do we got here? Total assets in thousands. So, big number. 4 billion in total assets versus 3.2 in liabilities. We've got debt obligations. So we've got 2.2 billion there, 2.7 billion in debt, which, I mean, their asset base is increasing. It's increased by 700 million or 650. And their debt has increased significantly as well to obviously put those assets on. If we read between the lines, they've increased their debt. They bought some money from the bank. They've gone and spent that money on some assets. We'll be able to see that in the cash flow statement in a sec, but just want to be wary that they're going to be able to actually pay for this increasing debt. So let's go and have a look. I mean, that's okay for the time being. It doesn't thrill me that they're having to grow the business with so much debt. And then when we do a deep dive on the business, it would be really about understanding how this debt is all structured, what are the terms of it, and things like that. All right, sick one. Let's go and have a look at the cash flow statement. This will help understand where the money is going. So here we've got cash flows from operating activities. with all their revenue streams, they've got almost a full page just trying to explain all the different terms that come out, which is really good for transparency. So that is something that I look upon favorably. It's just, for this quick check, it's above and beyond what we need. So we've got our figure down here, net cash provided by operating activities. Fairly consistent there. Let's have a look in the previous report as well. 144, 229. So for a business with, so much revenue growth, the actual cash in the business hasn't changed. The core, like when we're having a look at the net income, and it had gone from 5 million up to 110, over 110 million, a 20x increase over that 4-year period. The cash flow from operations, which is the core part of the business, has gone from 144 to 283. So it's doubled in that time over that 4-year period. But it really doubled in 3 years. So we expect these numbers to be a little bit lumpy, but we just want to have a look at the general trend and what kind of figures we're talking about. When we do a bit more of a deep dive, we can break down between each one of these businesses, pick apart random figures. So like gain on sale of a business, like they've had to put that down here. That comes off. There's other bits and pieces in there like that. All right, so let's focus on where the business is spending the rest of that cash. So purchase of equipment held for operating lease and for sale. Boom. Right there. Proceeds from sale of equipment. Boom. So when for leasing equipment, some basics are you have to buy the equipment initially, or you get it under favorable terms as well. So you can effectively lease that equipment or put it under financing, finance that equipment as well. You don't need to necessarily pay for it outright. And then you lease that equipment to someone that wants it. So under a certain amount of time, and while they pay you, you then can either pay those debt obligations you've got, or you pay down the money if you purchased it outright, and save up for when you actually need to buy the new one in the future. So there's a couple of ways that businesses can structure it, how they do their leases. Then there is that equipment. You then need to sell it in the future. So there's a point where it becomes, cost prohibitive to then hold it yourself, or you might want your customers to have the nice shiny new ones that they actually desire. They want to have the latest equipment. So then you can sell those assets over that time that you've actually had it. You then depreciate that because it becomes less and less valuable. And then when it's got the sale, you actually get the cash and it comes out here. And at which case, then you need to, like I said, buy it or finance how you're going to actually pay for that piece of equipment. All right, so the majority of the money that's going out is purchase from equipment, and then they've also got some sales. So we would expect them to be investing heavily, if it's growing that quickly, to be investing heavily in buying more equipment. It's over $500 million across those couple of years, which is significantly higher than previously. So we can obviously see we've got sold some equipment, bought some equipment, and we had the cash for it. Now back here, they definitely did not have $764 million to pay for it. They only had got 284 in cash. So we want to see where that extra money's come from. How have they actually financed it? So we come to cash flows from finance activities, proceeds from issuance of debt obligations. So the business has bought some more debt, bought some money that they've got to pay back in the future, and then they've also got principal payments on debt obligations, so stuff that they've already already have the debt for, but they need to pay off. So you can see that effectively they bought some more debt. They paid off the majority of this new debt has just gone to paying off the old debt. So they're left with like 500, the difference, and boom, they've paid the rest of that off with that cash that they'd generated from the business to keep it kind of back to square, and that's how they finished up that year. In the most recent year, they've gone from 1.6 billion, from debt. They've then paid 1.2 billion of that off, so they've had 400 million to spend. They've gone and paid off that. They've then combined that cash from operations, and then they've held on to it by the look of it to the end of the year to increase their cash position. So, is this business worth looking at? It's probably one that's not a clear black and white answer for me. The revenue growth is very high. The margins of the business don't pop out drastically right at the start, but the net at the end of the day looks pretty good. The amount that the business is investing is pretty good, but also I don't really like the amount of money and debt that they're piling on the business to grow it. It would be nicer to see it being fueled from the cash flow in the business and reducing the ratio of that debt. But each to their own. It's just a matter of risk. When analysing the business, it'll be very important to understand the customer, the segment, and doing tests to see how this business's income will go during difficult times. So whether that be industry headwinds in their area, how are they going to fare? Is it a certain customer segment that is reliant on long-term contracts, like say for defense and things like that? Is that going to then decrease their potential income in the future? All those kinds of things. But business that's turned that, it could definitely be very speculative, and hence why there's a lot of interest in it. It's not going to be difficult for them to, with the growth that they've currently had, it probably is underpriced at the moment, but I won't be doing a deep dive on it and doing a valuation of the business at this stage. If you guys are keen on that, or you've done your own analysis, feel free to let us know in the comments, and see what you guys are doing with it. If there's anything interesting in the stock that you think other people that are watching this video or investors would be interested in, let us know. It's about creating a community around this channel, because we're all trying to do the same thing. We're all trying to hunt and look for exceptional stocks. So for me, I won't be looking into Willis Lease Finance Corp further at this stage. It does present an interesting value play, with it being priced so low relative to the amount of growth the business is having, and the net incomes did look pretty reasonable. Like, they weren't overinflated, they weren't undercooked in terms of the net income here. It wasn't like they're, got an issue. The fact that it didn't grow too much from one year to the other, there are one-off terms and things like that, but we saw total revenue grow from 569 to 730. The only thing was that expenses grew pretty high during that time as well. So it'll be about you or yourself doing that analysis to see, are these things going to continue to grow during that time, etc. All right. And if management can do that themselves. Otherwise, hope you liked this breakdown. Feel free to check out this next video because YouTube thinks you'll like it. Cheers.